Alright guys, what's going on? I am going to show you how to do the my method. This is probably gonna be a longer video, but I'm gonna get into detail on all of the things that I use personally. It's mainly only three indicators. So let's get into the first one. So number one is going to be the RSI. So that is the relative strength index. So that pretty much just shows kind of like a stochastic where, um, like where it's overbought up on this little kind of grayed out area is kind of in the middle. That's what I consider chop. You don't want to be trading when it's in the middle like this. So, and like all this is an example of chop right there, all this in this box here. Anything that we're looking to do is going to be outside of this area. So this little hash line here and this little hash line here. Um, this is going to be the top part's going to be your overbought, and the bottom part's going to be your oversold. And you can kind of see like right here where it's really oversold, it has like this red kind of tint to it, and then when it's overbought, it's got like that green tint to it. So that's a good indicator where you're looking for some, really good rejections off of that. So this is a really good indicator to use. Um, okay, so the first one is the relative strength index. That's pretty much what that is. The second one, and I'll explain like how we use this in the strategy as well. So the second one is going to be the Bollinger Bands. So that kind of goes in hand with, so this is without it with Bollinger Bands, and then when we turn on the Bollinger Bands, that's what it is. It's pretty much the exact same thing as the RSI, except it just shows you kind of a different way than the RSI does, and it, like when you have a chop, it has the bone and the brains kind of squeezed together, like kind of in this area. And then when it's kind of trendy, you see how wide they are right here. Um, so that is another good indicator, and that plays hand in hand with the RSI. So that's pretty much all we do for actual indicators. The next step is going to be kind of marking out your high liquidity zones. So any big like if you zoom out, I'm on the 5 minute chart right now. So if you zoom out, excuse me, and you see these like kind of heavy bottoms here where it like kind of V-shape recovered, um, those are high kind of liquidity zones. So I use like a horizontal line just to mark those out on the buy side and the low side. So right now we don't really have anything to the left. So what we're going to do is mark out these low ones. So, and these ones are irrelevant because they've already been swept out by this one. So we're looking for just a couple more. I doubt we'll get anything past that, so we'll just leave it at that. And pretty much what we do is, I'm going to go through a couple examples. I'll probably be looking at maybe even this, because this is kind of a big liquidity zone because it rejected off of this this low right here a couple times. So that's a nice big liquidity zone that we could get a little scalp reversal off of as well. So this is pretty much what we're looking for. So I'm gonna go ahead and hit play here, or I'll start going slowly. So what we're doing is we are watching the RSI. We're not doing anything until it's either overbought or oversold. And then once we get to that point, then we'll take a look at our entry. So we'll wait till it gets to one of those sides. It's kind of just in the middle here. It's choppy, choppy. Okay, so we have an oversold right here. So let's go back to that bar right there. So this is the bar that's oversold. So this is where the um, where it kind of goes into play here. So we're not, this wouldn't be an entry just because like you could say like this is a nice little liquidity pocket with all these wicks. So liquidity pockets, we're looking for wicks, we're looking for lows, like V-shaped lows, but mainly wicks is a good indicator on where's the tool here? Um, one second, there we go. So this area, like all these wicks here, that's a good indicator for, a good place to be looking out. So the next step is going to be with the Bollinger Bands. We want to match that with the RSI. So we have it oversold here where we can see it closed outside down there. And then we also have a candle closure outside of the Bollinger Bands. So you see that low side of the Bollinger Band. We have a candle that closed outside of it, and we have another one that went through it and then still closed on it or outside of it. So that's a good indicator because that matched up with that. But for my strategy, if you wanted to be aggressive, you could take this short here, or sorry, this buy here. But we didn't really hit liquidity yet, so there's really no point. I mean, we hit these two wicks here. We could try it out. I mean, because it did kind of close back above, but we're usually going for 40 points for 40 points. So with two Nasdaqs, that's $1,600 each on each side. So we're going 40 for 40. Again, I probably wouldn't take this trade just because we didn't hit like this bottom here. I would want to wait for this to be swept, but just for the sake of the video, we can just see. So, and it ended up hidden. Okay, so you could have taken that. But I always do 40 points, 40 points. I don't try and go to the opposite side, liquidity or anything like that, because honestly, you just never know what the market's trying to look for. So just go 40 points, 40 points. You already have a pretty much high probability with that. Okay, so here's another one. So now we just swept all this liquidity here that I was looking at. We have oversold, really oversold. You see the red down there? And then we have a big candle closure outside. So now I'm getting in it. This is 100% a trade that I would be looking at. Let's see, 16 for 16. Perfect. And let's see, hit it. It's really that simple. We're just looking for those three indicators to line up. We're looking for the RSI to be oversold and a candle closure outside of the bottom of the Bollinger Band and a sweep of the liquidity because it got it right, swept all that out. And you're going to get a reaction off of that. This is all algorithm and you're going to get a reaction off of that every single time. 40 points is kind of what I see works mostly. So, um, and then just the same way in a buy. So like even we wouldn't take this one just because it didn't close outside of the Bollinger Band, but let's just keep going and try and find a buy side. So going, it's all chop. Really not doing anything. Just kind of staying in the middle. Okay, so actually I clicked the one ahead. I would probably get in the buy here too because we have oversold. Candle closed outside of the Bollinger Band. It swept out this previous liquidity that then swept out this. Like even though this right here, this low swept out this low, now this becomes your liquidity. You see what I mean? So now we swept out this. So now we go, hold on, let me delete all that. So now we go into a buy here because everything lines up. We have the oversold in the RSI, we have a candle close outside of the Bollinger Band, and we have a sweep of liquidity. It's that simple. So we get in here for 16 for 16, right there, and we watch it work. Boom, instantly. It's really not that hard. And like I noticed, like if you're gonna have a losing trade, you might as well just go break even because it's very rare that this system will come against you and go into drawdown. It's going to react instantly. So as soon as you get a nice candle close above, or like kind of like I would say maybe like kind of a little bit more than halfway, like 75% to your take profit, just go break even. Like there's really no point. Um, okay, so now let's keep looking for a buy side. I want to do the opposite. So this would also, now this whole leg down created a lot of more liquidity. So we have liquidity there, We have it there. Those are kind of relative equal highs. And then we have obviously the big one up there. But all these are scalpable when they get swept. So let's see if price wants to do that this certain day. Okay, so right here we have it swept that one. We probably with live market, we could have gotten in up here and then gotten this rejection down here and that probably would have won. But we'll just take it as back testing. I'm going to wait until it sweeps out this second part here for an entry. Boom, there it is. And we're going to wait for we're not in yet. We're not in this trade yet. Even though it swept it out, we're not in it yet because the RSI is still down and it's not over the Bollinger Band, so we're not in it. We're just going to keep going. Watching that RSI. Waiting for it to be overbought, oversold. Okay, actually we would have probably not taken this trade just because of the Bollinger Band, but that's okay. We missed out on that trade, but that's alright. So now we're looking for it to sweep out this liquidity. And then the RSI to, like, see here, even though we had it close outside of the Bollinger Band here, and we had the RSI line up to where it was oversold, we still wouldn't take that because it didn't sweep anything of value. It swept, what, this candle here? That's really nothing of value. And I guess the way to see good liquidity value is like kind of like a bottom with multiple wicks or a big wick or some big candles. You know what I mean? So that's like a good liquidity point. So we're gonna wait until it sweeps out this kind of bottom here, because we know that's where the market's going. Boom, right there. We wait for a candle closure outside, overbought, oversold. We hit buy, everything lines up. Stop loss down here, 16 for 16. We're just going 40 points for 40 points, and then we'll wait and see what happens. We probably would have been broken even. We would have probably gotten stopped out like right here because once it goes back up, remember we go break even, and we probably would have walked away with like $300 or two Nasdaqs or something like that. But for the sake of video, we got stopped out if we held it and didn't touch it. But that's okay. So now, um, you honestly could have gotten right back in where it stopped you out because everything lined up again. We, where's my brush? We swept out this liquidity. We had to close outside and it hit the bottom of oversold. So we could have even gotten our money back by just, getting back in there. But whatever. Let's keep going. Wait for. Okay, do we sweep? We swept that out. So honestly, we would have been in here, right? Because we swept out this liquidity over here. We swept that out. And we are oversold. Candle close outside. Or touching the Bollinger Band. 16 for 16. See what happens. Boom, smashed it. Guys, what have we taken like 4 trades? We lost one out of like 4 or 5 or something. I'm trying to find like a buy side one that we could do an example of. Where I'm just waiting and seeing till the RSI goes up. Waiting. I want to try and find. This probably would have been a good one. So for the buy side, this is another good example here. So we came up, we had these levels marked out. Sorry, let me delete all that. I got confused for a second. So this would be our liquidity sweep, essentially. Oops. Um, so we have a candle closure outside, we would sell here, 1600 for 1600. Take profit. I was just gonna close out that because it's okay. Well, let's just go find another one because that's not a good example here. Okay, we're looking at the RSI. We're waiting for it to be overbought. There's got to be a good buy example here. Come on. Oh, sorry, a good sell example. This is all we've been doing is buys. I mean, that's another one right there, but for the sake of the video, showing you a better example, we'll just move on. Oh, right there. Okay, so we swept out this high, and we know it's a good one because look at those wicks. Look at that wick. Look at those two wicks. That's perfect. And then we have this high up here, and then this high. Like, that's a lot of liquidity areas that we are looking at on the 5-minute chart, and we have overbought, and it's outside the Bollinger Band, so we hit the sell button. We don't even wait for a confirmation candle. We just get right in. We want the best possible price that we can get. We'd probably even be somewhere up here, you know what I mean? We'd probably get it up here. So, now let's see. Boom, smashed it. So it's pretty simple. So we're looking for liquidity sweeps, wicks, kind of large areas with a bunch of candles that rejected off of a certain price a couple times. We're waiting for our RSI to be overbought or oversold, and then we're waiting for a candle to be outside the Bollinger Bands, and then we put our entry in. And that is it. It's super simple. Let me know how you guys make out with this. The only kind of downfall I could say would be to like accept that there's not going to be a lot of trades throughout the day, just because it is what it is. But honestly, in my opinion, the less trades, the better, because the less risk that you have in the market is always the best. So, I mean, if you can be patient, you can see we've made almost $5,000 in those few trades. So over a week, you could make that with just even with just two Nasdaqs. You know what I mean? So it's super worth it in my opinion. I think this is going to be good. I can't wait to try this out this week. But other than that, let me know if you guys have any questions. Later.